On a Friday afternoon, a development quietly occurred that signals a fundamental shift in how SMX is managing its treasury and long-term financial structure. Most investors who glance at the SMX stock ticker today see a company that has been heavily beaten down over the past year. What they fail to notice, however, is the aggressive balance sheet cleanup that just took place behind the scenes. Retail investors using platforms like Robinhood or SoFi often view SMX as just another speculative, penny-adjacent supply chain play. High volatility reinforces the idea that the stock is little more than a lottery ticket, but that perception overlooks the company's deeper transition. SMX is positioning itself as an infrastructure layer for the circular economy, not merely a software or tracking company. This week, SMX opened a corporate treasury account with the Kraken exchange. On the surface, this sounds like a crypto-centric headline, but it represents something much larger. The company is not attempting to pivot into cryptocurrency speculation. Instead, it is building the financial plumbing required to turn verified recycled material into a tradable digital asset through its plastic cycle token initiative. This step aligns treasury management with the company's long-term vision of tokenized environmental verification. A growing gap now exists between how the market prices SMX and what the company is actually doing. The stock is valued like a struggling software firm, yet operationally, SMX technology is already embedded in gold refineries in Dubai and rubber manufacturing plants across Southeast Asia. This disconnect has become more visible as trading activity increases. On Friday alone, more than 1.2 million shares changed hands, a notable surge compared to the quiet trading periods of late 2025. Institutional ownership remains extremely low, sitting at a fraction of a percent. This is where the tension lies. Many institutional strategies on platforms such as Fidelity or Interactive Brokers prioritize predictable revenue and established margins. SMX remains in a transition phase where the technology is proven, but large-scale commercialization is only beginning. As a result, the stock remains hypersensitive to partnership announcements. When the company recently expanded its rubber traceability platform to include latex and gloves, the market responded with a brief spike in momentum, signaling that investors are watching closely for signs of recurring revenue. For self-directed investors, the key issue is expectation versus reality. The expectation has been that SMX would continue diluting shareholders simply to survive. The reality is more nuanced. By converting $20.6 million in debt into approximately 1.2 million shares, the company simplified its capital structure, eliminated interest expense, and removed the looming threat of debt default. While dilutive in the short term, the move significantly improves long-term financial flexibility. Comparing SMX to companies like Nvidia or Apple misses the point. Those are finished products operating at scale. SMX is a raw industrial experiment that is just beginning to gain traction in real-world metals and plastics markets. Its business model relies on three core components: an invisible and indestructible molecular marker, a reader that detects that marker, and a blockchain ledger that permanently records verification data. SMX is not selling hardware or software alone, it is selling trust and regulatory proof. This is why the company may not appear on the radar of robo-advisors or wealth management portfolios. Risks remain high. The current ratio is still below 1, meaning short-term liabilities exceed liquid assets. Even after the debt conversion, SMX is operating on a razor's edge. Its 6 major global partnerships, spanning from Singapore to France, must convert into consistent cash flow before market patience wears thin. January's momentum illustrates both opportunity and risk. The stock surged over 100% at one point before settling near the $24 range. Such volatility attracts short-term traders, increasing the risk of pump-and-dump cycles that frustrate long-term holders. However, it also reflects growing awareness. Looking ahead, the catalysts are clear: the first revenue reports incorporating the Kraken Treasury strategy and the issuance of plastic cycle tokens. If SMX successfully links physical recycled materials to tradable digital credits, its valuation could shift toward a fintech industrial hybrid model. Regulatory pressure remains the company's strongest tailwind, as governments in Europe and the U.S. demand transparent, verifiable supply chains. In summary, the expectation that SMX is merely a distressed debt play is being challenged by the reality of a cleaned-up balance sheet and a strategic move into digital asset treasury management. The company has